Students, today we are going to learn depreciation. In this problem, a company purchased three different plants, three different fixed assets, of which one is to be sold. Let me see the problem. Look at the board. On 1st January 1985, a plant purchased for 2 lakh. So, first plant purchased on 1st January 1985. On 1st July 1986, another plant was purchased for rupees 1 lakh. So, first plant purchased on 1st January 85 for rupees 2 lakh. Second plant purchased on 1st July 1986 for rupees 1 lakh. On 1st October 1987, the plant purchased on 1st January 1985, the first one was sold off for rupees 80,000. Okay. On the same date, a fresh plant was purchased for rupees 80,000. So, on 1st January 1985, they bought the first plant for rupees 2 lakh. On 1st July 1986, they purchased another plant for rupees 1 lakh. On 1st October 1987, they sold the first plant for rupees 80,000. On the same date, they purchased one more plant for rupees 80,000. Okay. Write off depreciation at 10% per annum on straight line method. Assume company accounts are closed on 31st December of every year. Prepare plant account and depreciation account for first 3 years. Prepare plant account and depreciation account for first 3 years. First, we should know what do you mean by first 3 years. Yes. Now I am going to do working. Take first plant purchase date, which is on 1/1/85. From that date to calculate 3 years. So, first year, second year, third year. First plant purchase date purchased on 1st January 1985. From that you have to calculate 3 years. So, we have to prepare plant account and depreciation account up to 31st December 1987. Then now we'll take plant 1 purchase date. Plant 1 purchase date is 1/1/85. Sale date we know when it was sold, 1st October 1987. 1st October 1987. So, we have to close first plant on 1st October 1987. Then take plant 2 purchase date. Plant 2 purchase date on 1st July 1986. 1st July 1986. First plant concern, we know purchase date and sale date. But second plant concern, we know purchase date, but we do not know when we are going to close the accounts. For that, we will take this date, 31/12/87. Okay. Then we will take purchase date of plant 3. They sold the first plant on 1st October 87. Same date, they bought one more new plant. The third plant accounts to be closed on 31st December 87. So, first plant purchase date and sale date we know. The second plant and third plant purchase date we know. We do not know when it is to be closed. It is to be closed on 31st December 1987. Now, first plant period ending, first year ends on 31st December 1985. Second year ends on 31st December 1986. So, from here, 1st January 1985 to 31st December 1985, how many months? 12 months. Then second year also they used 12 months. In third year, first plant used only for 9 months. Then second plant concerned, first year ends 86. So, from year to year, how many months? 6 months. From year to year, 12 months. The third plant purchase date to closing date, how many months? 3 months. So, first plant, first year they used 12 months, second year they used 12 months, third year they used 9 months. Plant 2 they bought in the second year. So, second year they used for 6 months, third year they used for 12 months. Third plant they purchased in the third year, they used only 3 months. Now, I am going to do working. Plant 1. Plant number 1. Take this date 1/1/1985. They bought plant for how much? 2 lakh rupees. They bought plant for 2 lakh. Its period ending 31st December 1985. On 2 lakh, we should provide 10% depreciation for 12 months. So we can provide full depreciation 20,000. So balance 1,80,000. Then on 31/12/86, second date. First we closed accounts on 31st December 85, then 31st December 1986. In second year also first plant they used for 12 months. So 2 lakh into 10%. They used full year, so we can provide 12-month depreciation. So balance book value 1,60,000. Then first plant closing date is 1/10/87. So 2 lakh into 10%. First plant third year they used only 9 months. 9 months. So depreciation is 15,000. So balance 1,45,000. This is the book value. They sold selling price. They sold first plant for rupees 80,000. So they incur loss 65,000. So first plant working over. Then plant 2 working. Plant 2 they purchased on 1/7/86. They bought for 1 lakh rupees. 1 lakh rupees. Its dates already we calculated. 31st December 86. On 1 lakh we have to provide 10% depreciation. Second plant, second year they used 6 months. So 5,000 rupees depreciation, 95,000. Then second plant used in the third year, how many months? 12 months. So again 1 lakh into 10%, 10,000, balance 85,000. Then we have to show working for plant 3 also. Plant 3 also. Plant 3 purchased on 1/10/87. They bought for, the third plant also bought for 80,000. 80,000. Its accounts are closed on 31st December 87. Value of depreciation 80,000 into 10%. The third plant they used only for 3 months. So 2,000 rupees depreciation to be provided, balance 80,000, 78,000. Now I am going to prepare plant account. I am going to prepare plant account. They purchased on 1st January 1985. We have to prepare accounts for 3 years. So 85, 86, 87. Okay. Now we'll take the items relating to the 85. Yes, 1985. Plant 1. On 1/1/85 they purchased. On 1/1/85 plant purchased. So to bank, value 2 lakh. Here 31/12/85 they have to provide depreciation. On 31/12/85 by depreciation how much? 20,000. Then in second plant and third plant no 1985 transaction, so we have to close this year ledger. So 2 lakh minus 20 equal to 1,80,000. So by balance CD 31/12/86. The opening balance of 1985 is to balance BD value 1,80,000. So in 1985 they did 2 things. One is they purchased and they provided depreciation. Now we'll take 1986. So 1986 where we have year 1 transaction, year 1 transaction, year 1 transaction. First we have to record the purchase value. On 1/7/1986 they purchased second plant for 1 lakh. Then on 31st December 1986 they have 2 transaction relating to the depreciation. So we can merge first plant and second plant depreciation. We can combine first plant and second plant depreciation. First plant depreciation how much? 20,000. Second plant depreciation how much? 5,000. So totally we can provide depreciation 2,80,000, 2,80,000. So balance by balance CD 31,12,86. Then 11,87. This is the last year. Opening balance 2,80,000 minus 25,000, balance 5, 1 borrowed 7, 5, 2,55,000. This is the closing balance of 1986. The same thing is opening balance of 1987. Then look at the transaction relating to the 1987. So here this is also 1987. Second plant also related to the 1987. Third plant also related to the 1987. First we will go as per the date. First we will take first plant transaction. On 110/87 they sold plant. They sold the first plant, its depreciation 15,000. The sale value is by bank 80,000. Then on the same date the company incurred loss by profit and loss account. Value how much? 65,000. Next they purchased a new plant. On 110/87 they bought one new plant, value 80,000. Then we have 31 December 1987, we have two transactions it relating to the second plant and the third plant. This one and this one, both we can combine. On 31st December 87 we can combine depreciation of plant 2 and 3. Plant 2 depreciation how much? 10,000. Plant 3 depreciation how much? 2,000. So total depreciation 12,000. Total 3,35,000 minus credit values 31st December 1987, balance on 1/1/1988 to balance CD. Now 15,000 plus 80,000, 95,000 plus 95,000 plus 65,000, 0, 16 plus 12,000. So balance total 1,72,000. We have to deduct from 3,35,000. So minus 1,72,000. Balance 3, 6. So balance is 1,63,000. Balance 1,63,000. This answer this balance we can reconcile. So first plant we bought and sold, it was agreed. So second plant balance and third plant balance we have to add at last. 85,000 plus 78,000, 1,63,000. Same value we are getting. So our answer is correct. Then we have to prepare depreciation account. We have to prepare depreciation account. Here in first year depreciation credited, date 31st December 1985. So to plant account, value how much? 20,000. On the same date it should be transferred to the profit and loss account, 20,000. Second year again depreciation credited, date 31st December 1986 to plant, the value of depreciation 25,000. On the same date the same value of depreciation should be transferred to the profit and loss account. So first year one depreciation, second year also one depreciation, but in third year we have two depreciation because first plant was sold in the middle, the second one not yet sold. Okay, so we have to show the sold plant depreciation and balance plant depreciation also. In third year we have two type of depreciation. First we will copy the date. 110/87 to plant sold value depreciation. On the same date it should be transferred to the profit and loss account, value 15,000. Then balance asset value depreciation to plant. Its depreciation is 12,000. On the same date, it should be transferred to the profit and loss account, 12,000. Here, the total depreciation for this year, 27,000. Students, in this problem, a company purchased 3 plants, of which one is sold. So, in this case, the workings are very, very important. Yes, students, we completed this problem. In next class, we will solve different problem. Till then, bye and thank you.